Hello folks, this is Raj Sastri from Raj Option Trading. Today is April 1, Fool's Day. So today I want to talk about beaten down mid-cap biotech stocks. These are stocks with market cap $2 billion to $10 billion. So this is one of my favorite market cap because these stocks are not very risky like small cap. They have a good amount of growth ahead of them, unlike large cap stocks. That's why I like these mid cap names, especially biotech beaten down stocks. So with that, I have a couple images here. One is Galapagos. These guys are a very good biotech company. They fell off of Wall Street grace of late, but I think it is good to start, nibbling this company a little bit, buy a little bit stock and take it from there. Next is ACADIA Pharmaceuticals. So this is a good company. Again, stock fell down pretty hard last month, and I think it's good to nibble some at this point and take it from there. And next is Serrapto Therapeutics. This is into human genome, as you might be knowing, and this company also fell down pretty hard, and good to really buy some and take it from there. So with that, overall, from a projection perspective, global biotech market is expected to grow at a compounded annual growth of 15.83% from 2021 to 2028. That's a very good growth trajectory. So companies here, they're really working very hard to really make sure most of these rare diseases have cures. That's why I like these companies. And I also love mid-cap stocks because they have a very good growth, and they're not as risky as small cap, and they really give you most of the bang for your money. So that's why I love mid-cap stocks, and I always invest in them. Whenever I get a chance. So with that, here are the list of companies. These are beaten down mid cap biotech stocks. So this is a list of 25 companies here, and the ones in bold are my favorites. And starting with Galapagos, so $79 company. As you can see here, it's beaten down 59% in 1 year. So that's the most in this list, and the remaining companies are a little bit lesser, 38, 21. It's basically starts increasing from here. The most beaten down stock in this list is Galapagos. The reason I like this company is really, it's 1 year sales growth is minus 42, but if you look at quarter over quarter, there is an increase. They started to turn a corner, and as you can look at, there is not too much float, which is okay, and not very expensive. The valuation price to sales ratio is 9.2%. And as you can see here, I could see some growth here. So 59% 1 year became 44 6 months, 19 4 1.5. I could see some semblance of bottoming out at this point. That's why it's good to really buy some. Even though chart looks ugly, it may be good to initiate a position here. And next is ACADIA. It's again one of the darling, very good institutional sponsorship on this company, nice gross margin, and it also has got good the revenue growth. When it comes to 1 year growth, it is positive, also positive quarter over quarter growth. So many of these companies, they either have very good earnings growth, or they really fallen down so badly it's about to bounce back. So with that, I will have you go through this list in detail. The reason I highlighted some of these are really these are nice companies, and I see a potential in them. And with these biotech companies, as you know very well, when it's really beaten down, that's a good time to invest some and forget about it for a couple months or even a year. So it will always come back when there is a announcement or a new drug coming through. Stock will shoot up, and you can trim some of your position at that point and take it from there. So that's one of my favorite games. Buy some of these stocks, just forget about it. When there is a huge move, you can sell some and look for next beaten down stock, and game goes on. That's one way to really invest in these companies. So with that, let's look at a couple names here. The first one is Galapagos. GLPG is a symbol, and these guys are into small molecule antibody therapies, and they kind of help with the treatment of um, rheumatoid arthritis, Crohn's disease, and a bunch of other diseases here. The stock price is $79.19, and market cap is 5.22 billion. So as you can see here from the stock chart, I think they did very nicely, earlier on. Then later, they kind of, came down here. 2020, as you can see here, they fell down pretty hard and continued in 2021 also. So, I see some uptick even though it's a little bit early. That's why I'm, being a contrarian here on this stock. And I think, it's turning a corner at this point. That's one of the reason I'm buying it, even though chart looks ugly, but I do see some signs of recovery here. It's a good company and working on some good indications for the diseases. And if you look at the numbers itself from a market cap perspective, it's a train wreck. It was $13 billion company back in 2019, and now it's $6 billion company. And back in 2020, in 1 year's time, it kind of shaved off like half of the company's market cap. And now they even came down, $5.22 billion company now. So with that, I see the stock has been taking a beating. Wall Street clearly did not like the way this company is operating at this point. That's why it's good to be a contrarian and hold the stock for a while. From a price perspective, stock price perspective, same story. Stock price has been continuously falling to 06 back in December 2019, all the way to $79 now. So that's why it's kind of out of favor at this point. Stock is on a sale, as we say. And from a sales itself or revenue, this is where I see some improvements. It was 130 back in 2019, became 117, 124. Now I see some growth. So from 124 became 157, 173. That's why I see the sales itself, the revenue itself is turning a corner. It will take a while for Wall Street to catch up to it, but I do see a good turning point here with the revenue growth. And the quarter over quarter growth also, it's now it's getting positive. Back here it was negative because it has to be compared with the previous year's number, but now with the 2019, it's 13, it's 130, now it's 173. There is a good growth here. So as you go forward, I think they will do even better because they have to compare now with the 195. That's even a lower number. That's why I see the comps or the comparisons will become better as they go into next quarter, provided they do better on the revenue number. They do have good amount of cash. They have got $6 billion cash, pretty consistent all the way through. That will be enough for them to fund their R&D and really make this company cutting edge. There's some debt, not much at all. It's very low debt, and gross margin at this point is zero. Net margin, I do see there is some improvement in the net margin. It was high negative before, but now it's negative 40. So there is some improvement there. They're not earning money at this point because they're still funding their growth. So that's why they don't want to show any earnings at this point. Price to sales ratio is really very low multiple, which is a good story. So with that, for this with this stock, I'm being a contrarian here, investing a little bit early. I'm willing to hold this stock for a long time, at least 6 months to 1 year, get a nice bounce, and I might trim some of my position at that point. Next is Kdf Pharmaceuticals. And as you can see here, this company is into CNS or central nervous system disorders, and they have multiple indications here. They got treatment for hallucinations, delusions associated with Parkinson's disease. So stock price is $25 and the market cap is $4.10 billion. So company, has been stock has been doing pretty nicely. They got some bumps along the way, but last month stock has fell off pretty hard because of one of the indications that did not behave as expected. They did not get the approval, and they got some inquiries. So that's why stock fell pretty hard. I'm sure it will recover. All these biotech stocks, the moment you have to buy is when they fell off so hard. Initiate a position and slowly add to your position and build a base. So that's what I've been doing. As it fell off, I bought some, and I'm building a good base. And as it bounces off, I might trim some. So with that, from a number perspective, from a market cap, this company, I think it's, as you can see here, did very well from 2019 December all the way to 2020 December. But now, they almost cut in half, as you can see. It was $8 billion company back in 12/31, 2020. Now, 3 months down the line, it became a $4 billion company with this huge stock fell off. So with that, from a cash perspective, they got good amount of cash. They have good revenue growth, as you can see here, and debt is okay, not too much at all. Nice gross margin, 95%. I love that. And net margin is negative. They're still not making money. From an earnings space, there is no earnings. It's negative at this point. And price to sales is not too much at all. So valuation perspective, it's good to buy. So this stock, it has fallen pretty hard. So that's why I'm willing to buy. I do see some signs of improvement at this point. So that's why buy some, be patient, and take it from there. Next, we'll jump into Serrapto Therapeutics. These guys are a biopharmaceutical company focused on discovery development of RNA targeted therapeutics, gene therapy, genetic therapeutic modalities. So as you know, many of these gene companies they have fallen off pretty hard of late. So this company is no exception. Just by looking at the stock chart, you should be able to kind of judge this company to some extent how the behavior will be. As you can see here, went up, came down, went up, came down. Same story. This company, I think they produce some nice results and nice indications. Stock goes up. Then there is some disappointment. Stock goes down. So this time it's no exception. So it fell off pretty hard here. Now it's trying to make a base here. I'm sure it will come back here. So you could for these type of stocks, it's always kind of in the trading range. As you can see here, you could easily buy some now. 6 months to 1 year's time, you can sell it off. So this is a good pattern for this stock. You could do something along those lines, or if you're an options trader, you could buy long-term call option somewhere below the current price. If right now it's 76, you could buy a 70 delta call, maybe around $60 or so, and take it from there. So from a market cap perspective, it's been improved from 12/31 all the way to 12/31/2020, but now it's cut in half, similar to previous story. These are all beaten down stocks which have historically done very well. And from a price perspective, similar story. They've done well last whole year from December 2019 to December 2020, but now it's almost cut by 1/3. Sales has been a pretty good, consistent. As you can see here, 100, 114, 137. I think it's nice sales. There is a sales growth. You can also see quarter over quarter growth here. That is nice. And cash, they got good amount of cash. Debt is a little high, but it's manageable. And nice gross margin, 84.660. And the price to sales ratio is 24.6, which is not too bad at all. So with that, I would recommend this company, mainly for a bounce type play. You could buy now, wait say 6 months to 1 year. You will get a nice pop, and you can sell the stock or trim your position. Next is Global Blood Therapeutics, GBT. These guys are into discovery, development, delivery of treatments, and they also take care of sickle cell disease, So this company stock is $42. As you can witness from the stock price, this company also has got a lot of cyclicality. So stock went up, came down, came down, went up. So you could buy this stock at these levels here, and you'll get a very nice bounce back. And this time will not be any exception in my mind. From a market cap perspective, these guys are a little bit a downer, I would say. Back in 2019, they were $4.8 billion company. Fast forward now, it's a $2.65 billion company. So that's why some of these companies you got to kind of trade them in and out. Look for a sell-off, sold-off type position, or something like right now, and trade it off when they go higher. Um, from a cash perspective, they do have good amount of cash, some debt, nice gross margin, and net margin is negative. They're still not making money, no earnings at this point, and price to sales ratio is very manageable. So with that, as you can see from the numbers here, right now they got a sales quarter over quarter change of 1800%. So they're comparing this $41 million to this $2 million. So next time, next earnings will be comparing this $14 million to whatever is the earnings. So I think comps will look better as you go forward. That's why I think this has got some room to grow as the comps get better from a sales perspective. This stock will take care of itself. Next, let's look at FibroGen. This is one of my favorite stocks. I've been trading this for a long time, and these guys are a biopharmaceutical company, and they have a drug Roxadustat, and these guys are into small molecule type indications. Chronic kidney disease. They treat the chronic kidney disease. And as you can see, your stock price is $35, very much affordable. Market cap is $3.27 billion. And the stock is again same story, cyclical type nature. Go up, come down, go up, come down, and now they're down. So, and they're trying to come back, as you can see here. That's why I want to buy this at this point, hold it for 6 months or 1 year, and trim the position a little bit. Look for next beaten down stock. In the biotech world, as you all know, as a one stock pops up, there are two stocks which are popping down. So that's why you can buy these beaten down stocks and trim the stock that pops up. So that way you have the constant supply of money to buy these beaten down stocks. From a market cap perspective, this is also a similar pattern here. It's kind of constant, as you can see here, $3.7 billion back in December 27, and now we are 1 year and maybe 3-4 months. We are $3.27 billion. It's a little bit down from what it was before. That's why this stock kind of gives you opportunities to buy and then trade off and buy again. From a price perspective, kind of stayed pretty flat for most part, as you can see here, 42 back in 2019. Now it's 35. So that's why it's a good stock. You can't go wrong with these stocks. You can always buy at a lower point and trade around and be patient a little bit. From a sales perspective, I think this company has done pretty nicely. 8, 24, 43, 44, 65. That's why comps are also good. If you look at the quarter over quarter sales, it's positive in last 2 quarters. I think it will continue because next time we'll be comparing with the $24 million, and comps will look better there too. They do have some debt. They have a lot of cash and good gross margin, 96%. Still not making earnings yet. EPS, earnings per share, is negative, and price to sales ratio is 18, which is pretty low. So with that, I recommend this stock. It's already beaten down at this point. You could buy some and hold it for 6 months to 1 year, and then trim your position and take it from there. Next is Neurocrine, Biosciences, NBIX, and this is one of my favorites. I always trade this all the time. It's a $98 stock, And these guys are into some very good indications here. They treat neurological, endocrine, psychiatric based diseases, um, and they also treat the associations with the Parkinson disease. They kind of treat those indications. And as you can see your stock chart, it's up, down, up, down, up, down, same pattern. All many of these mid-cap biotech stocks, they're not very risky, and they always give you some drop off and bounce back and whatnot. That's why you can always buy some when they drop off, and then you can sell them later. From a market cap perspective, I love the story here. It's $9 billion back in 2019, and now it's almost right there, a little bit lower. So that's why these are sometimes it's not good to hold this for a long time. You can always buy some and keep trading on the bounce backs, and then shift to next stock which is fallen off. So from a price perspective, it's a similar pattern here, up and down type pattern. Sales perspective, I think they are doing okay. It's kind of up and down as usual. Quarter over quarter sales growth, it's not very predictable. Sometimes it's very high, 71%. Right now in 1231, it's 1.6%. So that's why not very predictable. That's why Wall Street loves predictability. That's why it's whenever it's the earnings are down, it kind of dings the company, or if there's an issue with any new indications, stock will fall off the cliff. They do have good amount of cash, 801 million, not too bad at all. Debt is very much manageable. They do have positive free cash flow, and they have good gross margin and good net margin, and they also have earnings. So that's why it's not a negative type company. I mean, they do have a good profit margin, and they do have a good earnings per share, which is good. So with this same philosophy here, stock has fallen off the grace at this point. Stock is on a sale. It's good to buy some and hold it for a long time. With that, we'll just quickly conclude. So this is a list of all the stocks. I love the stocks which are highlighted in bold: Galapagos, ACADIA, Sarepta, Global Blood Therapeutics, and so on. So with that, happy investing and thank you very much.